Good morning. This is a video morning brief of the U.S. grain markets. I'm Rich Pasta for Critical Point, Friday, Jan 17, 8:48 a.m. Eastern Time. All right, the market is preparing for a 3-day weekend. We've got a holiday, and we also got the presidential inauguration. We've got all types of political stuff going on next week, things being signed, getting the ball rolling here. We've had the interest rates back off sharply this week. We think the model was correct in allowing a top this soon, and maybe that's going to be a good thing in the next couple of months here. But I'm a little suspicious we're going to see a rebound also at times, and maybe some of the financial markets at least may not particularly care for that. But what this is doing is also making the dollar index back off a bit here. That may or may not help us, at least on the wheat market, and overall for commodities. It may take a while to do that. We still have people monitoring South America, concerned of where we're going in crop production and this and that. So far, I don't think it's necessarily that bullish out of Brazil. It's more Argentina. And I still think the world's going to have lots of soybeans, and we still have issues of biodiesel, palm oil, and a variety of other markets, soil coming down, and even the funds beating them down, and that's kind of holding that back as well. Some of the global economic news by some of the big countries and global banks, World Bank, IMF, they're saying the global economy is growing, but it's not growing as well as they would like. So there's some issues there as well. Within our own country, we still have very good demand, very good economy here. All right, let's move to the corn market, and what we have is that it's moved sideways for 4 days in a row, right at my critical point, minimum upside objective. Yes, it did go by above this minimum objective, and then I said it could jump up to this one. And look how well it held right there at 480 March corn, okay? Fantastic Yahoo for my critical point method here, okay? But what's going on? Well, this looks a little like a bullish flag. Now, that's for chart people who are inside the overall technical group, okay? Chart people simply just look at charts. They might draw some lines. They might use a moving average, and that's it, okay? Technical people are chartists, but then they add indicators, and they add a little math to it, okay? Then quantitative analysts interested in price only go even further with math, higher levels of math, science, okay? They're very rule-driven, so they can computerize it. And those are the type of commodity traders we have today, across the list of those who may or may not look at fundamentals. And the fundamental people have learned to respect those technical people. It's big, big money. It's a feedstock into the machine of the marketplace, when it used to be just a way of studying the marketplace, the machine, and the output, okay? Now it's also an input as well, okay? All right, at any rate, I think this is a bullish flag. It normally means you had an up move, a sideways move, and then it moves up. So, but until it trades above 479 3/4, we don't know for sure. Maybe this is just a top and it wants to come down. Well, as it turns out, the model's actually looking for it to come down. It's saying we are due for a level 3 top. It ought to pull back into a level 3 bottom that could show up as soon as today, but it's likely next week. And then it ought to be up from next week into the following week. All right, so I think people are really just trying to rest here and get this holiday out of the way. But the point is, you'll have less and less business today maybe. It might make it easier for someone to shove the market down more than what people really want to do. Now, if we look at this indicator, it's rolled over, it's on the sell side, it's overbought, it's trying to leave, it's acting bearish. So we probably should assume we've got a level 3 top, even though the model is allowing for a blip up at the start of next week, then down into the bottom, a blip down. And then we get on for another level 3 up move. So a little tricky how to handle this. And what I'm wondering is, this prior upside target, is it now like a downside target and a floor? If so, maybe it's not going below 470. Would be very interesting to watch that. But I think most people, what they're doing is taking this up move and they're running their Fibonacci retracement. So using the 50% retracement rule, that's how much downside they're allowing. The model doesn't seem to have a favorite downside objective. It's saying those are all good methods of calculating how much downside, and it's all over the map in my opinion. All right, on the weekly basis, as I showed you in the weekly update, the market's probably going higher into February, okay, maybe even into March. So I think this is just a setback within this larger uptrend is what should occur now into next week. Now let's move to the Chicago wheat as a clue of also Kansas and Minneapolis wheat. And we clearly have a level 3 top. The trend is clearly down, unlike corn, and it should go lower and perhaps all the way back down into a bottom sometime next week. That bottom can delay to the following week as well, but I think it's probably going to bottom next week. Then it's going to snap back up, and I didn't write my notes down, but I'm going to visually just say it's like that, into the next level 3. This may just be range bound for a while and maybe base building, because I'm still bullish all 3 markets into summer. And I'm bullish all 3 markets when I look into February, maybe to March. Okay? But for the moment, I got to be a level 3 bear. Okay? Those types of traders that they have to get a certain amount of business done every single month, so you know you're going to get the bulls, you know you're going to get the bears, you know you're going to get buying, you know you're going to get selling. It occurs in the cash market guaranteed. It occurs in futures. It's the human way of doing business. It's just a characteristic, okay? So the point is they just have to sell. They can't help themselves. Even if you don't have good quality news, they're going to do it anyways, okay? This is the indicator acting bearish. It's now approaching mid-range. It can bottom at mid-range and move back to overbought. It can move beyond mid-range and go all the way down to oversold. Don't know how much downside we really have. It's already met my better downside objective. The model's saying, maybe that was the better, maybe not. The model's really looking at these lows down here saying, hey, there's just not a lot going on here to get people excited. It could go all the way back down, but I think that's probably still just base building. Let's go into the soybeans. Clearly a level 3 top, okay? And now what we're doing is moving this out here into next week. We want a level 3 bottom. So soybeans is in line with the wheat market, or the wheat market's in line with soybeans, doesn't matter, and it may not even be a connection, it may be all coincidence, okay? Any rate, you can see it's trying to bounce today, and that could be for a level 4 bounce, and I'm a little suspicious it'll top today. However, I think it needs to go down some of next week. So watch the 5-day average where the March soybeans come up their head and move on down. Starts trading below the low of today of 10.19, and let's check yesterday's low, 10.18.5. I don't like that. That might be my 2-day double bottom that I like to bet against. On daily charts, I've always thought you get two consecutive time frames. That's not a real double bottom. So I think it's probably going lower. So if it bounces towards the 5-day average and then goes lower, I'll use this little rally right here, add it down to here. I think this market needs to go down to 1010 on down to 990 going into this next level 3 bottom. Once we get that level 3 bottom, I think the next level 3 rally might put us all the way back up again. Unsure about that, but I think we're probably going to see stable to firmer to higher prices looking out into February, maybe March, for U.S. soybeans. Right today, level 3 trends down. I'm assuming there's more downside coming. I'm assuming this is just a level 4 upswing, and this 532 daily slow stochastic indicator, one of my favorites, and the rest of the indicators normally just kind of go along with it. That's wide enough spread to suggest chance for lingering near-term downside momentum the next 1 to 3 days. And the model's saying, why, yes, it ought to be down into next week. So I think this is nothing more than a level 4 knee-jerk bounce here, maybe to settle out the week, and more downside coming in soybeans. Past results not necessarily indicative of future results. Have a great weekend holiday. Thank you.